Hey traders, welcome back to the Easy Forex Pips YouTube channel. In today's video, we're diving into a scalping trading strategy specifically tailored for the 1-minute time frame. This advanced tutorial will focus on the price action scalping trading setup and smart money concepts. These are very important to maintain for a successful trading career. We're talking about swing highs and lows, supply and demand zones, order flow, and the overall conditions of the market. In simpler terms, we're trying to figure out whether the price is going up, down, or just moving sideways in a range. So, traders, if that's something that interests you, make sure to hit the like button to show your support and subscribe to our channel to get more advanced trading strategy contents. See you after the intro and disclaimer. So, what exactly is market structure in the Forex world? Well, think of it as the blueprint of price movements. It's like looking at the skeletons of the market. Now, there are two main market behaviors: trending and ranging. In an uptrend, the market is on a joyride to the upside, creating those higher highs and higher lows. Remember, the market doesn't always move in a perfect pattern, especially in shorter time frames, like in this 1-minute chart. Here you can see, market is currently in an uptrend, creating higher highs and higher lows, but we are also seeing some higher lows and lower lows. So, you have to notice this upward movement as the price breaks those structure levels to the upside. As long as that keeps happening, we're still riding the uptrend wave. Now, when we talk about smart money trading, we're essentially looking for clues from the big players in the market, the financial institutions like commercial banks, central banks, money managers, and hedge funds. They create liquidity sweeps. For instance, a liquidity sweep pattern forming it below the major swing low suggests an upward continuation. On the flip side, if there's a liquidity sweep pattern above the swing high, it's like the crowd hesitating, and a possible reversal might be in the cards. This knowledge guides our trading decisions. In our Forex journey, we look at breakout trends, reversals, and these liquidity concepts to catch the rhythm of the market. Let's unravel the secrets behind breakouts and what they really mean in Forex trading. But first, let's glance at the anatomy of candlestick formations on our charts. Candlesticks, in all their shapes and sizes, hold immense significance when we're discussing breaks and understanding liquidity. So, how does a breakout happen? Picture this. A candlestick boldly shatters the previous market structure with its body. That's a breakout in action. But here's the kicker. We need to ensure it's not just a false move, a trick for liquidity. A fakeout or a liquidity sweep sees the price darting back into the range immediately. To distinguish a real breakout, watch for the price poking above the previous structure and then closing back within the range. That's a no-go for a valid breakout. What we really want is the following candle to close above the previous one. That's a clear sign. The sellers tried, but the buyers are taking charge. For an even stronger confirmation, wait for the next candle to surpass the highest point of the previous one. That's when you know the momentum is truly shifting, not just a temporary liquidity grab. Remember, this applies to bearish scenarios too. Now, let's tackle major and minor highs and lows. What makes a swing high or low powerful? In an uptrend, a robust low is where the action begins. It's the highest recent point the price touched. And the latest price action broke the established structure by going up. As we can see, there's no fair value gap. Now, looking at the previous market movements, we see a big fair value gap right below the recent swing low, and here's a valid order block zone. So, there's a good chance the price might dip below the swing low, grab some liquidity, and then keep going up when it hits the order block demand area. So, when we spot this pattern forming, here's our plan. We'll place a buy order just above the order block zone. Our target is the next big resistance zone. To control risk, we'll set our stop loss just below the swing low. This entry strategy is based on a smart combo of order blocks and a liquidity sweep. These points are like origin stories. They kickstart the uptrend's powerful movements. To spot a reversal, we look at these origins, and if we break below the last origin, it's a sign of a potential shift. The same principles apply in downtrends. Let's start with the scalping trading setup. Here's the checklist before starting scalping trading. Check the economic calendar, focusing on high-frequency times like the London and New York sessions. Choose major currency pairs with low spreads to minimize the impact of spreads gap. Implement a risk management plan, ensuring that no more than 1% of your capital is traded. Do back testing before trading with real money. And for price action trading setup. At first, for price action setup, we will start with 15-minute time frame to understand overall market conditions. At first, identify the market direction by adding the 50 EMA to the chart, and also identify the market structures for optimal trading zones. Once we identify them, we will go to 1-minute time frame for entering the trade more precisely. We will wait for the price to enter our trading zones. Once the price comes to our trading zone, we will look for reversal candlestick pattern for further confirmations, like double top or double bottom, pin bar or any reversal candlestick patterns. Also use Fibonacci replacement levels to enter at a better price and setting a good stop-loss point. And finally, don't forget to manage risk, trading with 0.5 to 1% risk per trade. And for understanding advanced strategies and smart money concepts, consider order blocks, fair value gaps, and factors like liquidity and trading volume. By understanding these structured approach, you can enhance your scalping trading strategy and increase the likelihood of successful trades. Let's examine practical trading examples on the chart. Firstly, on the 15-minute chart, we can see that the price is trending above the 50 EMA. The market consistently establishes new higher highs and higher lows, indicating a bullish overall direction in this time frame. Before diving into specific entries, it's crucial to determine the optimal locations for trading opportunities. We notice that the 50 EMA line working as a resistance, price keep rejecting when it tried to touch the 50 EMA line, offering a potential chance for a long position. Therefore, we will focus on 1-minute chart to identify potential long entries. Examining the 1-minute chart, we observe a bullish engulfing candlestick pattern in the market, providing confirmation for opening a long trade. Set the stop loss below the recent swing low and set the take profit 2x the risk. Voila, we won this trade. Let's delve into another illustration. Currently, the market is exhibiting a prolonged downtrend, prompting us to explore potential short positions. Observing the market movement, we notice an upward surge that has created a fair value gap. Eventually, the market tends to fill such gaps. This particular zone holds significance as evidenced by price rejections. Notably, it formerly served as support and has now transformed into a resistance zone. Anticipating a price rejection in this area, we foresee a continuation of the overall downtrend. Consequently, we decide to initiate a sell trade at this area, strategically placing our stop loss just above this resistance area. To optimize risk management, we set our take profit level at twice the amount of our calculated risk. Voila, here's another profitable trade. Practicing these techniques on your chart analysis can level up your game, understanding how prices move and nailing those trade entries. If this breakdown was helpful, show some love by hitting that like button. And hey, if you're new here, consider joining with us by subscribing to our channel. Catch you in the next episode.